Vanguard is reducing their fees, but is it really worth the hype or is it just more smoke and mirrors, Abe? Let's take this opportunity to pull the veil back a little bit further on the financial industry. That's exactly what you are here to do. This is Abe Abish, founder of Abish Financial Services. I'm Heather Branch, here to ask Abe again. Help us with some clarity, Abe. That's just, is that not at the end of the day what we all want? It's just like, This is my money. I just want to know what's going on with it.
Yeah. It's what we need. It's what we deserve.
What you deserve, right? You work so hard. You put all the effort in to save, to nurture. You worked hard. You saved. You were disciplined. You nurtured. You built this nest egg. And now you need the nest egg to start working for you in retirement. And it can feel, for a lot of investors, it can feel very challenging to just get some basic clarity.
Sure. Overwhelming, daunting. There's a lot of information out there. Like, where do you even start?
It's already so complicated. And then you seek out help, and then you feel that there's just jargon being thrown at you to just.
Opinions everywhere too. Like, who do you go to? Who do you trust? Where do you start?
Yes.
So you got to start somewhere.
Well, and then another conversation that we talk about very often is you're an independent financial advisor.
Right.
So when it comes to big banks, there is that. I mean, it can be a stigma, but it also can be reality where the people that are working at those banks, they have been given orders, marching orders from the top down, and they need to get out there and sell these things or do these things as an independent financial advisor. How does that differentiate you?
Well, as an independent advisor, I think you're talking about a lot of big box firms, Heather, where, you know the names out there.
Yeah.
When you're working for a firm, the big box firms, especially, you're in a box, right? So let's say you're 65 years old and you desire to be that classic 60-40 split between stocks and fixed income, between growth and safety, right? You tell your advisor, hey, I want to be kind of a 6 on a scale of 1 to 10, just north of middle of the road. Most firms will put you in the same portfolio with 500,000, 1 million other people in their 60s that also have a 60-40 portfolio. It's cookie cutter, especially with the huge big box national firms.
Yeah.
Because there's no way that they can monitor and have the advisors have the discretion to have different plans for thousands of people in their 60s. Instead, they say, this 65-year-old fits this bill. They filled out the questionnaire this way. They fit right here in this box or this box. And you can only have these options to put together a portfolio for them.
Yeah.
And that's, I can tell this story here in just a few minutes as we get into it, but that's what happened to a lady recently that we just helped. She was telling her advisor, she's been with the advisory firm for a long time. She wasn't necessarily unhappy with them, but she was expressing some of her frustration to me about them and kind of how they operate with her. She was telling this firm, she's been there for a long time, that, hey, I don't want to take on so much risk. Like, I have over $4 million. I don't even need income from the portfolio. Why should I continue to take on the risk I was taking 20 years ago in my 50s? The advisor's probably thinking, well, I can help you make more money. Yeah, but you're also going to have more volatility, which can cause less sleep, which can cause more stress, which can cause bigger losses. And the lady didn't want it, but the advisor kept her in this portfolio where she was 85% in stocks.
Yep.
That's probably much more appropriate for someone, 20 plus years younger, not 75, who doesn't need to be taking on all that risk. Like, why?
Right.
She doesn't have a lot of people, a lot of family members to pass the money on to. Legacy wasn't really important because there's not a big family there.
Okay.
She has more money than she's ever going to spend and enjoy. Why take on this risk? She's trying to tell the advisor that. The advisor wouldn't listen. And so that's one of the things she was telling me. Those are the things that kind of happen sometimes at a big box firm.
Yeah.
And then, you can feel like you're just a number. Some of these big box firms will have millions of clients. As an example or comparison, we have about 1,200-ish, primarily in the DC metro area. So we're a local family firm, independent. What does that mean? That means that myself and Shelly, my wife, partner here, we really call the shots. There's no one above us. There's no parent company above us. There's no bank, insurance company, custodian saying, hey, guys, if you want that relationship with us to stick and stay, you got to offer this product line. You got to sell this much of that or that.
Yeah.
That's not how it works.
Okay.
Being an independent fiduciary firm, we can really choose, Heather. We can go to the markets. We can shop around entirely. Whatever bank, insurance company, custodian we want to use, investment we want to use, that is the best thing for the client as well, because
Yeah.
then we can go to the client and say, hey, ma'am, you're telling me this is your frustration at this firm. Well, here's, we have the whole market available to you to invest in and to choose from.
Mm-hmm.
Based on everything you've told us, this is what we believe is best for you. What do you think? Right.
Okay.
And so those are some key differences in being independent, not having a parent company on top of you, kind of calling the shots and pulling those strings, if you will.
Yep.
Versus not being truly independent and working for a huge corporate big box firm.
Right. Because it happens a lot. There are a lot of great financial advisors, especially when you're starting out. You go to work at one of these big banks and they're sitting there at their desk and maybe they don't agree with what these marching orders they've been given, but they have to follow the directive. The majority of us, if you're lucky to have been a small business owner, you haven't had to manage this, but we've all been in situations where we had to answer to a boss in some way, shape, or form. Maybe we didn't agree with it, but you want to stay employed. You're a good human. We're all doing the best that we can. But in circumstances where you have to start sticking up for yourself, particularly thinking about the money you've worked so hard to earn and save and getting into retirement, I mean, case in point, there's such a pivotal moment of when you have to stand firm on your ground. And something that we have talked about before is the idea of Vanguard and Schwab and managing 401ks and how you often encourage people to look into these. They are big banks, Vanguard and Schwab, but they tend to have what you believe better investment options because Vanguard in particular is known. It was built upon the philosophy of having a lower fee. A lower cost investment opportunity for folks. Yes. And so they recently came out with this low fee structure to lower it again because they believe it's going to save their investors $350 million, Abe, just this year alone.
Wow.
So is this going to put pressure on BlackRock, Schwab, Fidelity, other big financial firms to do the same? But also thinking about the everyday man and woman, the people that you work with, Abe.
Right.
Is this really good news for us, for our retirement savers, or is this just more smoke and mirrors? And how do you differentiate yourself, again, going back to the big bank thing, working to, again, pull back the veil of what's going on with our savings investments? This is what makes the work you do at Abish Financial different.
Yeah, I think perhaps a title to this podcast could be mutual funds or index funds compared to maybe ETFs and low-cost funds, because this lady I was just speaking about, came in with over $4 million from a big box firm, and the advisor had her in a bunch of old school, funds that were 10, 15, 20 years old. These are mutual funds primarily with high expense ratios, meaning the funds were pretty darn expensive. And on that $4 million portfolio, the fund expenses alone were over $30,000 a year. Now, there are pieces of our portfolio that we put together here at Abish that don't have any fund costs, and there are pieces that do. Typically, the pieces that do have fund costs are going to be the ETF, the globally diversified ETF portions of our portfolios that do have fund expenses. And a lot of the times, Vanguard funds and other funds, Fidelity, Vanguard funds, the QQQ, they're in there, and the expense ratios are pretty darn low. So the fact that Vanguard is talking about lowering the expenses even more, I think is fantastic, because they're giving more back to the consumer, the client. Naturally, the client is going to want to use their funds. I think it's going to be a good deal for Vanguard. And I think naturally other fund managers and companies that built these funds and ETFs will do the same and follow suit. But what we found out when we are comparing fund expenses, just fund expenses, with this lady that has over $4 million, is that we were able to save her about $30,000 a year in just fund expenses based on the differences in the ways we put our plan together versus the plan together that she had at our phase one big box firm. $30,000 a year in fund expense savings on a $4 million portfolio. If this lady lives another 10 years into her mid-80s, we would have likely helped her recoup over $300,000 in saved fund expenses, not even advisory fees, just fund expenses. And she didn't realize that. She didn't know that, because who looks at your fund expenses and how often do you look at them? Maybe you look at them once a year, once every few years.
Maybe.
And she had been with this place for 10, 15 years probably. 0.77 was her average fund expense, when really they should be down at 0.1 or lower, maybe even 0.05 or lower.
Really?
As an example, a lot of Vanguard's fund expenses, Heather, and their ETFs are 0.04, 0.05. I mean, you're down to almost where these funds are free. They're not free, but they're down at very, very low. And now Vanguard is talking about lowering them even more. I think that's going to be a good thing across the board for all investors. And for this lady, again, a savings of $30,000 a year. Now, this lady was also talking to us, Heather, about taking a few more bucket trips, bucket list trips that she hadn't taken.
Yeah.
New Zealand, Australia, and there was one other country that I can't remember off the top of my head. And I said, hey, this is going to help you take those trips. I mean, this is $30,000.
Here's your $30,000. That's just the first year. Yeah.
Back in your portfolio. Take some of this money from your portfolio and go enjoy it. Don't wait till you can't do this.
Yeah.
And so those are the benefits of having a second opinion, getting your portfolio compared. If you're not working with advisor, you haven't had your stuff looked at, get your stuff looked at.
Right.
Get your plan looked at, put it all together, gather all the statements, get a good analysis of what you're doing for retirement, because there's a good chance you could uncover some inefficiencies. They could be huge. They could be life-changing. And wouldn't you want to know about that?
Right. Especially getting that second opinion, that analysis. Again, just every effort to really show people what's actually going on within their savings and investments, and to give them, we always talk about empowering people with knowledge. It's like, it's your money, your life savings. You deserve to know what's going on with it. It seems like a simple thing. Why is it so difficult to get?
Yeah, and it doesn't happen all the time, Heather, where we can save people so much money. Sometimes it's a couple thousand a year, $5,000 a year. But still, I mean, if you walked out of your studio right now and you saw a couple $100 on the ground, you're probably going to pick it up.
Best day ever.
Let alone $5,000, $10,000, or maybe way more in saved, expenses. But there just could be a lot of inefficiencies that you have. You may be taking on more risk than you need to. Maybe you don't have a tax plan, an income plan.
Yeah.
All of these things you need at the point of retirement to help you cross over into retirement successfully, and also something to follow, measure, and track as you're in retirement. Because if you don't have a plan, how do you know how you're doing? How do you know what to compare it to? Right? If the markets are down, are you down as much as the markets or more? Are you down less than the markets? When the markets are up, are you up? Are you up as high as the markets, or a good bit of the way up, with the markets?
Yeah.
Are you creating the income that you need? Do you have a healthcare plan and an estate plan? Many Americans don't have an estate plan, and they have a lot of money saved, and there's going to be headaches and trouble if they pass away without the proper estate planning documents. We've talked about a number of things here on the podcast, but I think a good takeaway would be getting a complimentary second opinion. Have someone look at your investments and your plan. Even if you're not unhappy with your current advisor, even if you're not unhappy with your current plan, and you've done it successfully up until now, more than likely there could be things uncovered. You don't know what you don't know that can really help you to improve efficiencies that could either be life-changing or just help you to get that, added sleep at night.
And to get that second opinion from an independent fiduciary financial advisor and retirement planner like Abe Abish and his team at Abish Financial Services, also a great way to go. So if you want the help of Abe and his team, they are here to do just that with and for you. You can visit us anytime, theretirementkey.com. That's where to start the conversation about a second opinion on your retirement savings and investments. You have worked so hard to get to this point. You deserve to empower yourself with this information. We also have links posted in the show notes, so you can just click there, or again, it's theretirementkey.com.